Welcome back to Markets at Noon right here on ET Now. And let's put the spotlight on the SME space because in the latest IPO of AJC Jewel manufacturers is out today. What are the key factors to watch out for and what are some key concerns investors should be mindful about? Ashesha is here with all the details. Ashesha?
Well, yes, Shrishti. So this IPO opens for subscription today. It will be open till the 26th of June. And this is a total 15.4 crore IPO. So issue size is 15.4 crore. But the net public offer will stand at about 14.6 crore rupees. Let's put the spotlight on some of the key concerns for this particular IPO. One is client concentration. So top 5 clients contribute about 55% of the company's total revenue. And this is a major red flag for the company. It is into a fragmented and unorganized market. It depends on just a few bullion dealers for 24 karat gold. So it clearly is not diversified when it comes to procurements and purchases. The company also says that it does not have any long-term supply contracts in place. So this is also a major negative for the company. Apart from that, geopolitical tensions could hurt margins, especially because of the volatility that we have seen in gold prices over the last few sessions on account of rising concerns geopolitically. This is likely to impact margins for the company going forward. It has not registered its logo and operations are also highly cash intensive. So several red flags in this IPO. It is a 15.4 crore IPO. It opens today and it will be open till the 26th of June.
Thank you so much for all those details, Ashesha. And the question on this SME IPO, whether it's an opportunity or a bubble, to give answer to that question, we have Tapan Doshi, a fundamental analyst, who will throw more light on this IPO. Tapan, clearly, like Ashesha was mentioning, client concentration is a major red flag for the company, and at the same time, lack of diversification is a concern for the company too. What is your understanding of this SME IPO?
Yeah, thank you very much. See, I totally agree with Aisha. See, overall, if you see, client concentration is one problem. Another problem is their business model. If you see their business model, no, there is no moat as such. No, anyone can enter easily. They are in the wholesale business. Okay, B2B business is there. Again, their margin is very thin, almost 1.3% only. So any fluctuation in the bullion, no, that will directly impact their margin, and any one bad quarter can wipe off their complete profitability. So that is also one of the concern which you have to take it. See, at the end of the day, if they get list also, their PE ratio will be more than 16 plus. Now, when you have such a thin margin, you will not get extra PE re-rating. And that is also a concern because, see, this is the business where anyone can enter. And if you see, big players are aiming toward this segment also. And overall, their cash flow is also negative because lot of capital requirement is there. So any type of movement on the bullion, no, their cash flow will completely get erratic, and that is where also the concern will be there. So because there is no moat and as such anyone can get in, that is a red flag. Even though their sales has been double, okay, sales has been double, even the PAT has been double in last 2 years, but that is not having a big impact on the valuation. The reason is simple: the business model is weak. So that's why I will totally give avoid to this IPO.
All right, that's a total avoid on this particular IPO. But Tapan, if you have to rather rate this IPO on the scale of 10, so any rating by you, because since it's an avoid, good to assume that it will be below 5?
Yeah, of course, it will be below 500%.
All right, Tapan,
Around,
thank you.
yeah.
Around, you can give us a number that you have in mind.
Around 4.
All right, thank you so much, Tapan, for